Alrighty, traders. Hello, everybody. Let's get into market update for you guys. Let's get into a market update. Oh, it's going to be such a good year, guys. It's going to be such a good year. Let me bring this up here. For now, today, guys, I want to cover. What I want to cover today is why I believe in the stock market melt up that I see coming. Why I believe this is the final leg before we see something really bad happening on the other side. I don't believe this is a buying hold opportunity in the markets, but I believe this move that's coming in the stock market is probably going to be the final leg before we see something much worse in the markets there. And we'll have a look around and see what actually happened with the markets today. And there's actually a few things that I want to cover with you today. Some things that are going on right now. So let me bring this up to here. Make sure you don't place a trade based on what you see in this video today, guys. Rule number one, guys, when you're trading the markets is whenever you get into the trade, your first question should be, what's my risk? That's the first question, not how much you can make. What's your risk? Okay. And this book here, How to Create a Fearless Trading Psychology. If you haven't done so yet, then make sure you go check it out. It's for free. And I will show you the book here. This is the book here, right? So this is this is the whole book here that I put together here. So chapter 1, The Art of the Exit. Chapter 2, Whisper of the Greed. Chapter 2, chapter 3. Marina. Hey, Marina. Happy New Year. Chapter 3, Reading the Tape. Chapter 4, Discipline Over Hope. So this is really going into a lot of the, like, what makes success in the markets. For you guys that are looking for the get-rich-quick scheme, just show me the strategy, forget the mindset. You guys are always you'll eventually find out there's a lot to trading more than just strategy. Patience versus hesitation, quiet depth of trend. We also have control over the life cycle of a trade, technology and timeless psychology, the art of stopping, and so much more there. So make sure you go check it out, guys. Again, that's that johnsfreegift.com. There should be a link in the description on this stream here right now. Again, go get it. It's for free. Marina, also, since you're part of my 1% group, we will be starting up again real soon. So make sure you keep an eye out for the emails, for the links and all that sort of stuff. And we're going to have another amazing year. So just make sure you keep an eye out for that. That's coming over the next couple of days. And we're going to start off and have another amazing year like we did last year. So let me get into now one of the big interesting let's go to here. One of the things I want to encourage you to do is whenever you're looking at the markets, I want to encourage you to look at the markets. 618 in the house. I want to encourage you to look at the markets in a way where, see how I've got my chart set up like this here. And the reason why is because when we're looking at these markets here, one of the biggest mistakes we can make is, and I'm just eating my breakfast right now. I just came back from an 11K run this morning, so burned about 950 calories. Well, that's what the thing said anyway. One of the worst mistakes that we can do as a trader is look too short term in the markets. And the reason why is for a few things. One, we can't actually see the big picture. This big picture here tells us a true story about what's really going on now. If we get so tied to, oh, look what happened today, right? We do this here, right? We have the moving average, we zoomed right in, and we're looking at today's candle. That's good in a sense. That's okay. But the most important part to us, and one thing that helps me stay emotionally controlled when looking at the markets, is always continue to look at the big picture. The big picture simply means, is this drop in the market just part of a pullback in a strong upward trend, or is it something different? And one of the big keys for me to making sure that I'm staying emotionally controlled in these markets is by looking at the big picture here. So always looking at, and that's where like I'm always, where are we? This one here. Yeah. And this is where like I'm always looking at the markets from this perspective here, from the actual big picture there. And the reason why is because, one, we're trying to do whatever we can. Whatever we get so focused on today and the candles and the big bars and down bars, we get so emotionally out of control that we start to make bad decisions. But if I step back and I look at this here, I'm not focusing on today here. I'm focusing on this overall movement here. Like, what's the trend? Where's the highs? Where's the lows? Is this changing trend, or is this just still part of a pullback? All the stuff like that. And that's what helps me stay emotionally controlled within the markets there. And the number one thing, guys, I'm telling you right now, the number one thing to your success in the markets is learning how to be emotionally controlled while you're in a trade. When it's going against you, when it's going for you, when you're in a losing position and you're like, oh my goodness, I'm losing money, or you're in a profit, oh my goodness, I'm fearful of losing the profit. We all know that, right? I can give you a really successful strategy that has the potential of making a really big profit. But if you're emotionally out of control all the time in the markets, then as soon as you go into a bit of a small losing position, you're going to get out really fast when you shouldn't have. Or as soon as you're in a nice little profit, you're like, oh, I better take it out before I lose it. And then, like, you see the dynamics there, right? It's always this emotions within us that stops us from doing really well. And the more that I've been able to control my emotions, meaning not letting it too high. Oh my goodness, I just made $200,000 on a trade, whatever. Or oh my goodness, I had a losing trade. The more that I can control that emotion, it's not, oh my goodness, and I get excited about like the money. And that's one thing that people that are part of my coaching program, my 1% group, which again, it's not open right now, it's actually closed. So I'm not marketing it right now, but one of the things that they will see throughout the year is that, one, they see I do really well as a trader. But secondly, even if I do make a really big profit, like I think there was a trade there that did almost 200 grand in one trade last year, almost like in profits. And it was just another ordinary trade for me. So, and how I do that is, one, position sizing. So it's the risk on the account. But then secondly, by looking at the market like here, I can see it from not what I hope perspective, but it helps me identify. And all I'm looking at here, really, I'm seeing the overall big trend here. But all I'm looking at really is I'm looking at these highs and lows in the market. And I know in the back of my mind, I know if these lows are still making higher lows, higher lows, higher lows, higher lows. This was the same low, didn't break the low though. And now we make another higher lows through here. I now know by looking at the trend of these markets still making higher lows that the trend is still up. Nothing's changed yet. So if I'm, oh my goodness, I'm scared of a crash because I read an article or watched a YouTube video or anything like that, I can go to the market with this black screen here right now, and it's going to give me one simple rules. Are we still making higher lows? Yes, we are. So the trend is still up. So what we're seeing right now over the last week has just been a very short-term pullback. And then sometimes I will zoom right in like this here to see what's happening on the short-term level basis and so on and so forth from there. And that's where most traders can't actually do really well as traders, because it's not, well, there's so many reasons why most traders don't do really well. One, they don't even know what they're looking for. They're just taking anything, so there's no system or no plan at all. They're like throwing a dart. Let's hope this works. And secondly, they're loading up like 50, sometimes all of their account in one position. and it's just a recipe for disaster. No. Tops in the house. Motion control is buy your cup of coffee. You're not going to let me hit that down, are you? I've got another one on my desk here. I've been very careful this time. Don't hit the cup of coffee to do another 3 hours. Oh, we'll see. Eh? Yeah, hit my cup of coffee over. So across the board today, still weakness in the energy. So USO is still heading down. TMF is still heading down. We actually have with the mining sector, we actually had a down day today, but you can see the buyers actually recovered quite strongly today by looking at, these are the mining sectors here, GDX and SIL here. So you can see the buyers actually recovered here. We're still in a very strong upward movement from here. So interesting to see that. What you also notice as well too is that look what happened with gold today. So we were up this here, come through here. We actually had this drop. This is the gold chart down the bottom here. We actually had this drop, but it rallied to the upside, and then the sellers came all the way down and closed it there. There's a lot of toppiness in silver and gold right now. So I would expect more drop to come. More sideways period, stuff like that. That's interesting there. Now the Dow Jones up here. Interesting looking at the Dow Jones. Probably the strongest out of all of them. It's at all-time new highs. Still a very strong upward move from here, as you can see. But today, very, very strong day today, right? We started off weak, as you can see here. So we started off very, very weak, and then the buyers came in and closed it very, very strong. So I think the Dow Jones is going to start to play a catch up, because it really didn't do much. If I bring up this chart here and I bring on my candlestick chart, you'll notice with the Dow Jones really hasn't been as strong compared to the other indices. So, and now you can see we're at all-time new highs right now and pushing to the upside. So very, very strong in the Dow Jones here. Let me go back to my tablet here with ore. So the S&P 500 also. So let me just remove you. Don't need to worry about you. So what happened today is, again, just looking at short term, just a bit of a holding pattern, but still making these strong high lows through here. So very, very strong still on the S&P. NASDAQ is sort of holding here. We're starting to make these equal highs, but we're making these higher lows through here. So you see this low point. We see another low point, another low point. To me, it looks like this is a setup for, and what I put on the title here is, I believe that looking at, now if I go back to this other screen here, like this here, so that's that point through there. That's the Dow Jones. The NASDAQ is actually just holding here, as you can see. So very strong upward move, holding this big long-term sort of channel from here. If I zoom right in, and let me just take you off the screen, you can see how there's actually a bit of a, like a bit of a, like a triangle pattern going on right now from there. That through there, and also another bit through there. Bit of a squeezing pattern going on. Looking at the very short-term analysis there. But the uptrend is still intact. The reason why is because you see this is a low point down here. Then we have a higher low, higher low, higher low, higher low, higher low, same low. Didn't break it, making higher low. So the buy, this uptrend is still intact. It's not a reversal pattern. And if we have a look at, now we look at the Russell. The Russell's still having a bit of a short-term little pullback here. So let's go to the Russell now. Yep, nothing wrong with this. So if you look at the actual Russell, what's been going on, this here was the last high point from up here. Then it came down, made this low point down here, which was the higher low in the marketplace. If I just remove that as the trend line there, but look what actually happened just recently. If this was starting to become weak, what would happen is this. We would rally up to around about here. We'd come down, we'd rally up to about there, and then we'd start to roll over. But look what happened. We ran up and made another higher high. So what's probably coming down the road now is a nice good 50% retracement. So we might have a little bit more downside to come. Maybe. But I would say this whole area through here, as you can see, even from back through, that whole area through there is definitely a nice little support level in the markets. But we are still in a strong upward trend. So the trend is still very strong to the upside. Low or high, came down, made a significant high low. We pushed to the upside, made a higher high, and now we're going through one of these short-term little pullbacks through here. This is not the start of a downtrend. Not yet anyway. So looking at all the markets here, and now if I look at it from a weekly perspective, so let me just bring on this chart here so we can see the raw big picture here. If we have a look at, so this final leg that I see coming in the stock market, I see this is this chart here. There we go. That's better. Right. So this is obviously the Russell squeezed up long term. We're starting to develop this nice upward trend. We're probably going to pick up here soon. We're probably going to hold here soon and start to pick back up. Once we break above 260, then we're probably going to have a really strong move, I would say, up towards that 300 level from there. Dow Jones is still holding really strongly. This just beautiful long-term upward trend from here. We have these short-term little corrections, as you can see, but the majority of it has still been very strong up. So even if we did get drops, the drops are pretty short-term lived compared to the longs. So I would say that the Dow Jones is probably going to continue up from here. Ooh. The NASDAQ, once again, we're at this channel here, but the NASDAQ squeezing up here. If the NASDAQ does continue to break out here, then that's going to be a really strong move, probably around the 30,000 levels there. And then the S&P, this is the S&P here. Again, you see that 8,000 level, possibly even higher, maybe 8,500. It's probably going to come into play. So the overall movement out of the actual stock market right now is still setting up for one final move to the upside. And I say final move because we're already pretty high in this market. And I understand why people are probably calling crash. I understand it, right? Because if I take everything off the screen here and I have nothing on the screen, I can understand why people will be calling top here, right? We had a big move up, had a big move down. Nice move up, nice move down, nice move up. People probably thinking the market's going to come down here now. We're going to see a bit of a drop to the downside. I can understand why. And then they're probably factoring all this other stuff outside the markets there. But we're not there yet. Okay, we're not there yet. Right. This is the weekly chart here, as you can see. So I believe we have one more move to the upside. And how I get this is from looking at the real big picture. So if I bring this up to here, this is the monthly logarithmic chart. This monthly logarithmic chart using the projections through here gives me a guidance on probably where we're going to head to before we start to see. And we can see here that looking at extensions, so around the 8,000 level, then the 9,000 level, that's the two extensions of where the market's probably going to go to. If we do ultimately hit the top extension up here, which is just, it's a 161. This bottom one here is a one-to-one move. It's just using possible targets. But it's interesting to see that this 9,000 is also the top of this major long-term channel as well too. And that's where that channel comes into place here, which is this bottom one through here. So we'll probably have one more move to the upside. And then, yeah, then if you actually look at it from the perspective of if that did happen, then yes, then the market will be due for some sort of good correction for 1 year or so. Just like we got back here, right? Look at this here. So we had such a really, if you look at this back here, we had this big move. See this through here? Right, look at this here. So we had this very big move for a while, and this was one going on close to 2 years worth of a big bull market there. So 2020 was basically 2020 drop, and then from 2020 and 2021, that whole thing there was a very big bull market there for 2 years. So, but then after 2 years, we did eventually get to a point where the market will then run out of steam and we'll go through one of these corrections from here. But if you look at this chart here, as you can see, the best buying times here have been when the most people are freaking out, right? This here, when Trump became elected, was one. The whole COVID 2020, right? The 2023 recession fears and the tariff situation here. So as you can see here that, can you do the Dow Jones next? I just did. Oh, you talk about like the long-term picture like this here? Same with the, like what I'm doing here, but do it for the Dow Jones. Yeah, I just did some short-term analysis with that there, but I'll go over it again for you. I'll do. So looking at this level here, and the purpose of me bringing this up here is the psychology of why most traders don't do well out of trading. And it takes a long time to think like this, right? In the last 10 years, when have been the best buying opportunities? Where there's been a lot of freak out, recession fears, big crash coming. Right? It's those times when you get those times, those have been the best buying opportunities and are the best buying opportunities. The purpose of me saying this here is that the market is opposite to what the logical brain who don't understand these cycles, the market is the opposite to what we think. So when there's a lot of fear in the marketplace, they are the best buying opportunities, as you can see here. And then when there's a lot of greed in a marketplace, then that's been the worst time to be getting involved with something, right? So the fear and greed. But the unfortunate thing is at the moment of that particular time, it's so hard, right? Because the market falls off a cliff, like COVID and even tariff. Market down 20, 30% in a month. Oh my goodness, the market's falling off a cliff. Oh my goodness. And then you go down this rabbit hole of YouTubes, and then it's a field day for YouTubers when the market crashing. Why? Well, most people are fearful. So therefore they go out there and they try to look and look and look and look and look. And for us YouTubers, therefore at the time, we don't actually have to do clickbait. Why? If the market's crashing, oh my goodness, market's crashing, and it actually is, right? And we get your attention. So it's a field day for YouTubers out there. Right? I know I've been doing YouTube for a long time myself. I still suck at it. That's all right. But the purpose of me bringing this up to here is, guess what? There's going to be another one of these arrows that's going to appear in the marketplace. It might not be now. Heck, it might be August. It might be next year we get another one of these. Oh my goodness, the top's hitting, the freak out, and that sort of thing is going to come out of the marketplace, right? So I want to walk you down this path here of, in the moment though, the reason why it's so hard, because the logical brain, and I saw this the other day, I did a short a while ago, said the greed or the fear in this marketplace is going to send this market higher. And I think I was talking about the stock market or whatever, because there was so much fear in the marketplace. And I think I was doing, I think it was back here, right, back through here. And this is when the fear and greed index was a really, really extreme fear. And I was doing videos based off, here we go for a move to the upside. And I did a short basically saying that the fear in this marketplace is going to send this rocket ship to the upside, back to the upside. And they had a comment on my section said, John, what you just said there makes no sense at all. And I'm like, I get it. Because the logical brain thinks there's fear, market's going to crash. But once again, when you start to look at the big picture, when have been the best buying opportunities? In the moment of when, oh my goodness, the sky is falling. And guess what? There's going to be another one of these coming up. So if we're mentally prepared for that, we can see that, right? And we're looking at the Dow Jones. This is the Dow Jones picture here. Dow Jones in the house. So for the just eat and talk indices, huh? I've already talked about silver and gold. I already did. What are you talking about? I talked about what's happening with silver and gold right now, and yeah. So by looking out, won't be a 10% correction. Now anything's possible, right? Anything's possible. We could get a short-term correction, but the long-term movement still here is very strong to the upside. And I see the Dow Jones on a first short-term target getting to around probably close to the 55,000 level on this move up. Thanks, Top. I appreciate it, mate. I appreciate it. So it's the 55,000 level, which would be that there. So we could get a short-term little correction here, but that doesn't negate the big long-term trend. But then when we're talking about the shorter-term trend here and what's going on, let's go. There we go there, right? When we're talking about, so to me, on the short-term level basis, this is really strong. Very, very, very strong period through here. So I wouldn't be too worried right now. But for a 10% correction, where's that? Very low probability that's going to happen. We could get a shorter term correction, like a 5%, but 10%, that's a very low probability. Right now, anyway, right now. I think just breaking out and continue to hold this level from here and seeing this big long-term channel. No, I don't see a 10% correction coming right now anyway. I'm not sure if you saw. I'm not sure if you've been watching some other YouTube videos saying that that's coming, but right now, when we go on what the market is telling us right now, there's not even a sign of this thing topping out. Yeah. Or if we go based off what's been happening ever since these COVID lows, you'll notice that that's what's been happening, right, Abdul? Right? It's just yes, you get these shallow pullbacks, but that's all they've been the entire time. So no, I don't see a 10% correction coming. The biggest correction through here has been this one here, and that was only 4.5% there, maybe 5%. Okay, yeah, cool. Yep, no, I don't see that coming right now. Maybe once we have another move to the upside, then that's when I see like I see some really, and this is where like people that are buying hold right now. The interesting thing that I see happening right now is there's still a lot of bearishness out there in the markets. Like a lot of nervousness in the markets, but then I see once we start to get this movement going, then a lot of people are going to start to jump on the bandwagon of bullishness in the market, and then that's when we're probably going to top. The market never tops when there's a large percent of population out there saying one thing, and that's where once again when I go back to here, this is where you can never go based off your feelings or the herd or the noise out there, because as you can see, the noise through these arrows through here. Every single time we had these here, what was happening at that time? Oh my goodness, the sky is falling. The crash is going to happen. Extreme fear. Oh my goodness. Oh, and then boom, buying opportunity, right? So it's in the mix of, once you understand that, it's very, very hard initially when you get involved with these markets because you think, oh my goodness. And then you go down this rabbit hole of, yeah. So, what's my take on Tesla? I just saw that. Tesla, what's happened with Tesla today? Nothing's changed yet. We are still going through a bit of a correction here, but if I bring on this weekly chart here, this is the weekly chart. So you would notice that we have, like, this is the long-term trend line coming up through here. So unless we start to break these levels here, I don't think there's anything to be worried about. What happened there? So something like that through there. So we are still at a very strong up. And as you can see, right, every single one of these, it just did it again, didn't it? Just did it again on me. Yeah, right. So any one of these short-term, these pullbacks here for a few months, drop, they've just been trend continuations. But if we start to break this point through here, this 400 level, then it's game over for the bears, and then we're probably going to see more downside to come. So that's what you want to watch. Right now, there's no need to worry. But if this has started something much bigger, then if we do break the 400 level, then we're probably going to start to make our way back down again from Tesla. Tesla. Let's go have a look at gold and silver. Yeah, so definitely pretty far away from the moving average on both the weekly and daily charts. So that's the reason why we're doing what we're doing right now. So I expect more sideways consolidation, more particularly pullback. Not a complete change in trend right now, but we are going through one of these energy building phases again, right? Because as you can see, make it really simple, really easy. If you go through these markets, the market goes through phases, right? We go through energy using phases. So let me just show you here. So we have these movements from there to there. Let me just make this really thick for you guys so you can just see there's the energy using phases when the market's moving, right? So we go through phases and that they switch between each other. There's a move from there to there. There's a move from there to there. And then we have another move from here to here, right? So that's that move from there to there, right? So this is what's called energy using phase. When the market's moving, obviously think about it from using the energy, right? Or a bank account or funds money, that the market's actually moving in that direction. It's called the energy using phase. You're using energy to move it up. But eventually, in any very big bull market, you eventually come to a point where you go through a sideways consolidation / pullback. It's called the energy building phase, right? You need to build a bit of energy from there. And the same thing from here, right? We go through sideways. We need to rest for a little bit because the market doesn't just go straight up, 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 and up, and it just keeps going straight up, right? We'll go up for a while, for a few weeks, maybe for a few months, but then there's going to come a point in time where we need to rest and refuel, right? Just like we did back here. We actually stopped. We actually went up for a few months. We just need to pause for a little bit, let the market rest for a couple of months, like it just did back here, as you can see. So it went sideways for an over a month. It just rested, it refueled, and then we've gone for another big move. So what's happening right now is another one of these phases, which is the energy building phase to go for potentially another move. Now, how that's going to work, I don't know. Meaning what's likely to happen is we're going to likely to come back like we did back here, right? Look at this back here. The market actually pulled back to the moving average. But remember, this drop through here is not a bad thing. It's just the cycles of what markets do, right? So you can expect it. That's why when the market's made a big move for a couple of months, that's the worst time to get involved with it, because we're now likely to go through these, what's called the energy building phase, to have that next leg, because that's what big bull markets are, right? We go up for a few months and then we pause for a little while, go up for another few months and we pause for a while. That's a big bull market. So what's happening right now is we're pretty far away. As you can see, when we get too far away from the moving average, that's when we start to go through these energy building phases. And so as you can see here, that'll be the 52 moving average. We always see it comes back to the 52, then bounces, comes back to the 52, then bounces. So we may even just go sideways for a couple of months, or maybe even have a bit more of a drop down through here on the silver market. And then maybe we're going to go for another move back up towards maybe 100 here. Or if it's just going to go sideways like it did here, then we're probably going to go sideways through here. If we're going to go sideways, if we do just go sideways here for, I would say, a couple of months, like we did back here, if it just goes sideways, then there's another leg coming to the upside, as you can see here. So that's what you want to see right now. But if we start to get some violent moves on the downside, then that's going to completely change it. But if we just do another one of these where it's volatility, but it just goes sideways overall, when we get a sideways pattern with a strong moving average, that tells us there's probably another leg to the upside. And this is exactly what gold did. So if you look at gold, right, look at gold back here. So when I saw this, look at this here. So see how the moving average is coming up through here, strong moving average. But then we eventually, in a very big bull market, we go through what? See how it went just sideways? That's not the top. That's just it resting now for a little bit so I can go for another move. That's all it is. It's nothing. Oh my goodness, no, nothing. But look at this here. As it went sideways, it was just pausing, right? Let the moving average catch up, pause for 3 months or so through here, let it build enough energy, and then when it's time, then we go for another move to the upside. So if silver does just hold and go sideways, for trading purposes, there's at least another leg coming to the upside. But we need to have one of these phases again. We need another one of these energy building phases to then, because we've already used a lot of energy to the markets, and then we've already used a lot of energy in the markets right now in silver. Right, so look at silver here. Let me go back to the daily charts. This one here. Right, we've already used a lot of energy, right? But as you can see, the market goes through these different phases. So the thing for me, for trading purposes, I know the best opportunities are when? After we've gone through a couple of months of doing nothing. That's when I'm getting excited because it's building energy to go for the next move. And then I'm looking to get in on that next move for trading purposes. That could last a couple of weeks to a couple of months. So that's all that's happening, right? And once you start to simplify the markets like I'm teaching you here right now, it starts to make sense. You start to make sense of these markets on a bigger picture, right? We're not looking at divergence on stochastics or MACDs or Elliott waves or anything like that because that's complicated, right? P ratios, like I don't know. But when I can really simplify the process and understand what's going on right now in these markets, why are we stopping for? Why are we pausing for? Oh, because this is what big bull markets do. We go up for a few months, and when we've gone up for a few months very strongly, we've used a lot of energy to do that. And eventually, just like all markets, just like gold did through the last 2 years, and just like this market, we eventually come to a point where we need to pause for a little bit. That's when we do get a bit of a drop in the markets. We might get a bit of volatility as well too. And then we pause for a few months, and then we get going again, right? So when you understand that these are the different phases in the markets, you're not like, oh my goodness, silver and gold's going down here. You'll be able to see what's going on here, right? So you very simplify the process here. And the purpose of me saying this, I learned a lot of this stuff from WD Gann, by the way, guys. WD Gann, this is actually called price and time phases from WD Gann. And once you understand that there's price and time phases, you start to understand where's the best opportunity. The best opportunity is when? The best opportunity is when we start to break out of this resting phase and we're getting ready to go for another move here. So right here. Right there is where the best opportunity is because it's already had a fuel. Get in, ride the next move. Then eventually after that point, that's a trading opportunity. You get out. Now you can never get out at the exact top, right? But you understand what's coming soon. We go for another one of these phases. When we start to break up again, right? We've gone sideways 3 months. When we start to break up again, that's the start of what? The next move to the upside. Now, this is where trade selection won, but then trade management, right? Because we never know. Like, look at this back here. This breakout here only lasted about a week or 2 weeks. This lasted a couple of months, and this one is very strongly for a couple of months. So this is where the trade management, if you're trying to let the profits run, cut the losses short, you will start to understand. You try to get that right because you never know how much this is going to go here, right? How much it's going to go. And this is the same thing for gold as well too, right? Same thing for gold. Gold did the exact same thing, living on the weekly chart with gold. It's all the same thing, right? It's not nothing new. Every time we go through this here, energy building phase, right? And I call it the energy building phase because this is what, in a very big bull market, we don't want to be thinking it's just going to keep going up and it's never going to correct. If you're saying that, you have no idea how these markets work, and then you're going to get sadly mistaken. So what's happening now is we're still going through this very volatile sort of period through here, and we didn't have enough time to refuel to go for a big move. Why do we have such a big move through here, and why is it struggling now? Well, this move here had the fuel for 4 months to go for the move, and that's why we had the big move. And then now we go through another one of these phases, right? And this is what we do. This is what all big bull markets do, guys. Energy building, or energy using, energy building. And then after a few months, we go for another one of these phases, right? And this is what the markets do, continually going through these different phases here. So I'm always asking myself, 1, what sort of phase are we in? 2, what could be coming next? Because if I understand, okay, right now, at this point in time through here, and if I zoom this over right now, like here, if I'm looking at this chart like here, and I'm seeing this is going sideways with a strong moving average, that's telling me we're now spending a bit of time here going sideways. It's building energy, and it did here for 3.5 to 4 months. That told me that we're building energy, and when it starts to break up, like we do here, therefore, there's a high probability we're likely to at least make another leg to the upside, and that provides a very high probability trading opportunity in the markets. And then we go for the move because you're getting in after it's built a lot of energy. So this is where like the best opportunity is when when the market hasn't been doing much for a couple of months, but we're in a very strong bull market, that's the time to get excited because it's all it's doing is resting, it's refueling to go for that next move. And then boom, 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 boom. Right to the upside. And this is where, like, people, if you actually look at what's happening in the stock market now. So if I go to the S&P 500 and you see what's happening in the stock market right now, it's just doing one of these phases. And you see what I'm saying here, right? So when you understand this, now, yes, there's a possibility that this could fail and go down from here. But when you understand the different phases in the market, you can see what's going on. So if the S&P does start to continue, remember I said before, where's the best opportunities? Best opportunity is what? When the market starts to break out. So just like I mentioned just here, we went through a very big energy using phase for many, many, many months. That's why we're going sideways here. No, it's not the top in the market and so on and so forth, right? It's just refueling. It's spent, what's this here? How long did it spend? It spent 5 months going up. 5 months going up. Of course, there's going to come a point in time where it's like, oh my goodness, we've been going up for, it's like, could you imagine you training every week for 5 months and not really having any down weeks? You'll be like, I'm done for a few weeks. Let me go on a holiday. Like, I'm tired, right? I need to rest. So then you take a bit of time off, you rest, and then, okay, I'm excited now. Let me go back and do my workout and so on and so forth. And that's all that's happening right now. We're just resting. We spent 5 months going up. And now the market's just going sideways. There's volatility, but it's overall sideways. There's not big drops. Okay, cool. Remember I said before, where were the best buying opportunities? Best buying opportunities when the market's going sideways is when the market breaks up. So if the S&P starts to break above 7,000, right? It's now built enough energy to go for that next move. The market's not just going to, and this is where, like, if you ever see someone that says the market's never going to pull back, you know they're an amateur in the markets and they have no idea what they're talking about, and they're based on, and they're approaching the market based off a hope and not based off way markets work, right? And every single very big bull phase is eventually going to be met with what's called these energy building or what's called time phases from WD Gann. And the time phase is a correction, a pullback, right? Sometimes the best type of trades is when the markets go sideways and then we start to break out from there. Now, at the high probability, right? Every now and then, maybe 20% of the time, it does break out and then it fails and we go down here. Right? We know that, right? Like, there's no certainties in the markets, but if you start to understand, you start to get a massive probability of, one, what's going on right now? Oh, very strong bull market. We're resting here. Two, what's likely to be coming next? Oh, well, we're building energy. So once we break, we're likely to have another move up because we're just building energy here. We're building energy to go for the next move. Oh, so that's what's likely to be coming next. Oh, because the market's based off these energy phases. And when you start to understand the energy phases in the markets, everything changes the game, right? Now, it's not always easy to see these energy phases. That's where, for me, my number one trading pattern is called the L-shaped trading pattern. Let me show you this here. I call it the L-shaped trading pattern. It's this energy building phase. Let me go back to here. I'll go back to, I've got a screenshot of these energy, like these I'll call it the L-shaped trading pattern, because when you go through these energy building phase, but the energy building phase is sideways, that's the key. That's the key I'm looking for, right? So for example, here's an example here. Look at all these screenshots here. What do you see here? This top one up here. Market comes down. We went sideways, built energy, strong moving average. We have a follow through down. Look at this one over here. Down, sideways. Look at this one here. Now, these are foreign exchange markets, but it's the same thing, right, guys? Same thing. Look at this here. Up. Then eventually we go through a sideways pattern. But when we do go through a sideways pattern and the moving average is strong, there's a massive probability of what? Of seeing another move to the upside. And this up move here is an amazing trading opportunity. Does it last? Now, these are hourly charts, but I'm just showing you examples here, right? Look at this here. It's just, whoo, amazing, guys. Look at this here. Whenever we do get the market trending and we just get a sideways period like this here. Right, sideways period. When it does break downtrend, moving average, when we go sideways, there's a massive probability we're going to have another move to the downside. And once again, within that creates a massive high probability trading pattern that's likely to make a profit. Once I understand that, boom, 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 boom. Now I understand the setup I'm looking for. And I call it the L-shaped trading pattern because we have a move down, then it goes sideways. Same, look at this here. This is the another one here, right? Strong down, move 52 is coming down through here. Sideways, built the energy. And then when it broke, guess what? We had a nice move down. This here is what? Called a high probability trading setup. I've even got a thing called the L-shaped pattern. I'm pretty sure I do. Yeah, here we go. Look at this here. L-shaped trading patterns. Point blank, simple point is this. The reason why this works so well because it's off the back of what we understand about markets. We understand, and what I'm teaching you here is that this market is like an energy phase. That's why when you see a very strong bull market for a couple of months, that's a warning sign to not get involved with it. Because guess what? We're going to go through another one of these energy building phases, and you might be stuck on that for a couple of months. But look at this here. When the market has a strong moving average, but we have what's called L-shaped trading pattern, which is more like, it's like L-shaped trading pattern is, or an upside down L-shaped trading pattern. But here's an example of an actual L-shaped trading pattern, right? We have what? See how we had that move down from there to there? Down, then sideways, L-shaped trading pattern. So it's down and sideways to a strong moving average. Guess what? That's now a high probability that when it does start the break, we're now likely to have a nice move. I don't know how big, I don't know, but it's a high probability of seeing another move to the downside. That's what I'm looking for. That's all I'm looking for a good trade. And then guess what? It actually did it again. Meaning when we broke, we actually did it again through here. Down, and then it went sideways again. So when we broke, guess what? It had a high probability of having another leg to the downside. This is called trading the markets. Right? This is not, oh my goodness, it's going to go to the moon in 6 months. No. This is called, okay, there's a high probability of us seeing another move to the upside. This could be a good trading opportunity for me to hold for a couple of weeks to a couple of months. Rinse, recycle, repeat. That's what trading's about, right, guys? I want to see a high probability of seeing the next move. L-shaped trading patterns, right? Look at this here. So whenever I get this, what's called the time phases, right? The power of the L-shaped trading pattern. Whenever I get these time phases here, this here was an Ethereum trade that I took, I think last year. Yeah. Right. Whenever I get these, the market moving strongly, but then we get these what's called L-shaped trading patterns when the market comes down and then it goes sideways in a bearish example. Whenever we get these patterns, I just found that there's a massive probability that when it breaks, we're going to see a nice move down here. And within that creates a high probability, high powerful trading opportunity to take advantage of because it gives me a high probability of seeing what the next move is likely to be. So once it does start the break, I can get involved with it. Now, not every trade is going to be a successful trade, but it's the pattern, right? Look at this back here once again. The market was, look at this here, volatile, right? No L-shaped trading pattern, up and down, up and down, up and down, up and down. Then look what happened. We came down, we went sideways. It created the pattern for me, the L-shaped trading pattern. And then guess what? Off the L-shaped trading pattern, down, sideways, strong moving average. It gave me a high probability we're likely to see another leg to the downside. And within that, that's the trading opportunity I'm looking for. I'm looking for a high probability that we're likely to be doing these things here, right? So if I bring up to here, right? So here's an example of what we look for, right? What I'm looking for anyway. What is this here? This here, there's a lot of volatility here, right? A lot of volatility. But then what happened? What started happening here? The market went up, and then it went sideways here to a strong moving average. This is a 52, strong 52. It went up, it went sideways. Once I see this pattern, I know there's a high probability of us seeing another leg to the upside. And all I'm looking for then is I'm looking for a nice break up above here. And within that, that's where we could then start to see a nice rise out of the markets there. So that's it there. And this was the after effect right here. Where was it? There's the breakout there. And it had a nice move to the upside. So once again, what is this? This is a high probability trading pattern. And and again, guys, for me, the number one thing I'm looking for is what? Where's the L shape? Where's the L shape? If I can get this pattern, or this is the upside down L shape trading pattern. If I can get this what's called L-shaped trading pattern, there's a massive probability of seeing another leg to the upside, and within that creates a massive probability opportunity. Not me guessing, it's the same thing again and again and again, right? Here it is. Here's another one here. Now the L-shaped trading pattern is like here, where it comes down and then sideways to the strong moving average. That's all it really is, right? Whenever I get that, huge probability we're going to see this here. Now, I never want to get in early though. My key for me is I want to see it start to break, because when it starts to break through here, I never want to get in the sideways period, because I don't know if it's definitely going to go down. It can go up, right? So we want to start to wait for the break, and this break here gives us a high probability of the next move starting. So I don't know if it is going to drop here. We went down sideways, strong moving average, L-shaped trading pattern, strong moving average. Simples. I don't know if it's definitely going to go down. But the key for me that says now, this is when we're now likely to start to see that move, either up or down, depending on this one here, is we wait for the breakdown first. When it starts to break down here, this is where we can start to create, there's your risk, and there's your reward through there. Oh, wrong one. You guys get the point, right? You guys get what I'm trying to say here. That's your risk there, right? And then there's your potential reward within this one here, depending on how you manage it. This is where now trade management comes involved with it, and so on and so forth. And this is the purpose of me showing this here, and for you guys that have watched the replay and watched it all the way through, as you can see, this is what makes me so successful. It's just a very simple trading pattern that has a high probability of seeing what the next move is likely to be, so I can get ready for it. And as soon as it triggers, I have my losses, but then we go from there, right? And again, it's called the price and time pattern. The power of the L-shaped trading pattern, or price and time, what I learned from WD Game. And I promise you, look at this here. Here's another one here. So, L-shaped pattern then. Oh, let me go to. So now you can see the reasons why, guys. I promise you, if we can just stick to this high probability trading pattern, oh my goodness, then that's when your success rate goes up, your confidence goes up. Not only your confidence, but it gives you high probability confidence of what's likely to come next. Right? Like, what's likely to come next? Do you know how powerful that is? Like, people have no idea what's going on right now, let alone what's likely to come next. But the pattern here gives me a high probability of what? Of what's likely to come next. And what is that? Just like gold did, right? When we get the strong move up and sideways, once we start to break, out of that sideways energy building phase, it gives us a high probability of now we're actually making that move. So when I see this L-shaped trading pattern, I know there's a massive probability we're going to get this move to the upside, another leg to the upside. Now I'm just waiting for it. When's it going to start? 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 Or I'm not in it right now. Okay. Right. And this is where, like, if I just take this off the screen here, and I take this off the screen, for me, and this is all it really is, guys, for me, and across all markets, right? I'm seeing a lot of things coming in the comment section. I'll get to you guys in a minute. But I promise you guys, this is what makes my trading so simple. Because guess what? When I go to the market every day, I'm looking for the L-shaped trading pattern. Once I start to get it like here, okay, cool. Strong moving average coming up, higher lows. This is a very strong bull market here, and we're just gone through a resting phase. There's at least another leg to the coming to the upside here. That's all I can see right now. Oh, boom. Okay, broke out. Okay. Okay, cool. It's now probably starting, and then we see the move up, right? And then it goes for another one of these phases here. But the purpose of this here is when this here is trading the markets, right? Because through here, that's when you start to pick up maybe 60% of this move, if you're realistic with them, yeah? Meaning if I go to this chart here, right? If you did enter off what? If you did enter on the breakout here, then you might have caught, you know, if we're being honest, you might have got there, and then you might have gotten out here somewhere. Beautiful high probability trading pattern. It's a massive high probability trading pattern that is just, it's amazing. It's absolutely amazing. So, and so as I said before, guys, the thing about me and my trading is that I go to the market looking for the pattern. I'm not looking for, well, silver's definitely going to keep going up because, and then insert a whole bunch of story. And that's what the market does. And especially when it does this energy building phase and it just goes sideways for a bit. And that's why I said with you guys with silver, right? Silver. That's right. That's how you say it, guys. That's the silver, not the silver. If the silver just does another one of these guys here for the next couple of months, well, you know what's coming, right? When it does do that, we're probably going to break out and then maybe wake its way up to 100. But right now, it's just pausing. We had a very big move for a couple of months here. We've used a lot of energy. It's just now gone through another energy building phase to build enough energy to go for the next move. And that's all this market does. And that's all the phases in right now. Okay, cool. Let me go through. I'll go through some questions here. I've just been seeing a lot of comments here. And that's all I'm looking for, guys. When I see this pattern here, that's all it simply is. And for you guys that are trying to be smart, what I mean by is you're trying to add macroeconomics and all that sort of stuff to your trading. Like you can't add macroeconomics, right? It's all every day I'm looking for the same thing. Same thing. Why? Because when the same thing appears, there's a high probability of making a profit off that. And within that creates a good win-loss ratio, creates less stress. And then every now and then, probably 20, 30% of the time, I jump on these really big moves that make 2, 3, 400% return. Rinse, recycle, repeat. Have a good year. And I don't have to spend all my time looking at the Fed and the economic data and all that sort of stuff. Excel. Okay, cool. Dow Jones. John, are you going to speak of silver or gold? Well, there you go, Chris. You're probably gone right now and you probably missed out on silver and gold. He probably asked and then left and then he missed out on it. Or maybe he still is here. But there's your deep TA with silver and gold. Every time it's the same thing, guys. What's the trend doing? What's the moving average doing? What sort of phase are we in? Are we in an energy using phase, energy building phase? What does that mean? Thanks for your general teaching. I was able to capture the silver move from 57 to 72 with options. Oh, nice. Yeah. Jasmine, listen to this guy who'll make you money. Oh, thank you, mate. Yeah, Jasmine, mate. Like, I actually had a lot of my 1% group actually take it as well too. So they I don't know how you would have got out at 72 though, because that's pretty precise picking that point there. But if you did, then perfect, man. We definitely got a volume spike showing exhaustion volume. But good job, man. Good job. And Jasper, man, I'm not sure if you're still around or you're watching the replay, but I hope you can see here. I'm teaching you the tools so you can do this yourself, right? You don't need me. You know what I'm using. You know what I'm using to say we're probably going to go for another leg to the upside. And this rinse, recycle, repeat it, right? That's all it really is. Yes, I agree. If you look at the NASDAQ, do you see more of a pullback? I just saw that. No. Or should I say maybe? But remember, rule number one is what I want you to be thinking, Abdul, is what is the trend? Are we still making higher lows or not? So even if we do get a pullback, as long as we keep making higher lows, then even if we do get a bit of a pullback, then that doesn't matter. So right now, I would say no, but it may. It's definitely in a very big situation where we are right now. So that'll be very interesting to see what happens here. But we're still in a very big bull market. So even if we do have a little bit more of a drop, then yeah. Abdul. Hey, John, did you work at an institutional firm? Why do you ask that, Abdul? Is the way that I'm talking about these markets, does it sound like I do? I sound like I did? Just curious to see the reason why you asked that. Ted, do you spend time on sector in the markets that are very weak? How do you determine when a sector will show strength after years of downtrend? Any examples from the past you can show? No. I think the best thing to do is those sectors that haven't been doing much for the last couple of years are probably going to start to kick into a new trend. So just like gold did, right? It's just the if you look at, so the market goes through these overall phases, right? We go through a couple of years of a bull market phase, right? And then we might go through a couple of years of not much going on phase. And then we end up starting a new bull market and so on and so forth. And you saw this really, really clearly with gold. So if I bring up the weekly chart here with gold overall, you'll be able to see that we went through a 2-year bull market here, roughly from there to there. And then we actually went sideways for a couple of years. But then when we broke out here, we actually started to see, this is when gold started to really rear its head into, we're probably starting the new big bull market. And then for the last 6 months, this is when the herd mentality has been starting to look at gold and so on and so forth. So I would have to say the example would be, I'll be looking for markets that haven't done much for a few years. And those examples are the energy sector for me. So XLE. And if I bring up the big long-term monthly charts here, you'll be able to see what I'm looking at here. So this is the pattern here to tell me that when we're talking about sectors, now if the sector's been coming down strongly hard for a few years, there's nothing here to tell me we're going to start in the big bull market. I'll be having a big guess. But just like here, when the sector is very strong here for a few years, but then has been like the XLE has been doing nothing for a few years, just like gold, there's a kind of come a point. There's going to come a point in time when the energy sector then starts that new big trending phase, right? The energy sector is not just going to stay in this sideways phase and do nothing for or forever, right? Eventually, what? It's going to break out and start the trend again, right? So whenever it does, just like gold. So this is where like the energy sector to me is giving me a sign that when it starts to break out, that's going to be the start of quite a nice big bull market out of that level. That's the best thing that I can say from here. If I started coming up with, well, the Fed's going to do this and they're going to print money here and the money's going to go here, and that's a big guess. That's me having a guess of it, and I can't. That'll just be flip a coin basically, and most of the time I'm probably going to be wrong anyway. But if I start to utilize the way these markets work, meaning we were in a very big bull market for a couple of years, but then this period here has done nothing for 3 years. Eventually, we're going to break out and start the trend again on this market, right? We know that, right? So when it does start to break out, that's probably going to be the early sign, just like with gold. When it does break out here, this is the early sign that we could be getting ready for a very big bull market. Now, we know big bull market is higher lows. We get corrections, right? Stuff like that. But we never know how much that's going to be. Is it going to be 1 year? Is it going to be 6 months? Is it going to be 2 years? So on and so forth. So that's the thing about the sector rotation there. But if you ever go down the path of thinking that you know because the Fed and the government and the white paper and all that sort of stuff, it's a big fat guess. And I can't go on a big fat guess. Oh, just give me a sec, guys. All right, I'm back, guys. I'm back from outer space. Also, Abdul, man, to answer your question is no, I haven't worked in any. I've worked for a lot of companies that are trading companies. So I've done a lot of work with that. And within, like, there was one company that I worked for. I was basically a sales rep within the company. I ended up getting fired because I never sold anything. I was just talking about trading all the time and I didn't sell any programs. But that one particular company was awesome because we had access to all these major trading products, swing trading, short-term trading, cycles on commodity prices and all this sort of stuff. And I got access to all these speakers and all these traders and so on and so forth, and all different types of perspective of these markets and stuff like that, and spread trading and, you know, credit spread trading and different option strategies and fundamental analysis and all this sort of analysis from here. So, and then I worked for some other companies out there that were okay, I guess. So I've worked for companies in the past, but I've never worked for a large institution. I never wanted to go down that path myself. I just wanted to do it myself from there. But this stuff here that I'm teaching you, Abdul, it's only because I've been doing it for 20 years. And my number one thing, Abdul, is that I want to continue getting better at this thing called trading. So my number one thing is, what's the truth about these markets? Not the fluff and airy fairy and an opinion or a thought, but let's get to the truth. Because once I get to the truth of these markets, I can make good decisions, and with that, I'm going to make a lot of money. And so that's always been the number one question for me for the last 20 years of my trading career. And that's where I've continued to search and listen to the legends of these markets: Jesse Livermore, W.D. Gann, Paul Tudor Jones, and even one of my mentors in the past. And I had him for about 10 years, and he's a 7-figure trader. Like this year, last year, I think he made $3.5 million from trading. These take so long. I wish you get to the point. Jeez. Okay. Cool. Well, don't come around then. Because I'm telling you right now, what I just taught for the last half an hour is one of the most powerful things you ever learn about trading the markets, any market out there. There is no point. There's multiple points that I'm making. So bye-bye, natural. So I hope you can understand. And so within the working of that, and then also getting coached by a really, really successful trader. Again, he made $3.5 million. I think it was $3.5-4 million last year. So he's a multiple 7-figure trader every single year. He makes millions of dollars every single year from trading. And just to see the way that he approaches the markets, and he understands the markets, and he sees the markets. So for me, I've always gotten coached off these really, really, I spent a lot of money, by the way. I had to invest a lot of money, like well over 6 figures with these coaches. But because I was willing to invest with these coaches, these really successful people, I started to see the insights of how they think and how they see these markets. And from that, I got open to a world of, this is how they trade the markets. This is how they trade throughout the year. This is how they see the markets. This is how they understand the markets and everything with that. And then from that, I've continued to get better and better and better and better and better and better at myself. And within that, I've now do really well as a trader. And because I focus on the simple stuff out there, that it's actually going to give me a high probability of actually having a good year this year. Not having a guess that I think, the Fed's going to cut rates, so therefore, or the dollar's going to crash, so on and so forth. And it's interesting, isn't it, guys? Like, I promise you, if someone watched the replay back and it's been about an hour and 20 minutes, I promise you, if someone really understood the stuff that I taught in this session here and really took it to heart, it's going to completely change their life. And you're actually going to start to tap into the 1% that actually do really well. 95% of traders don't make money. The top 4% break even. And it's only really 1% that actually do really well from trading. We're talking multiple 6 figures. And then it's the less than 1% that end up getting to the 7 figures. Unfortunately, there's people out there that, will never get past that 95%. Just the way you just the way I do it. Just the way you're so calm and you're saying people will say no, the top is in, etc. But the whole perspective, we are still in a bull market. Yeah. Well, that's Abdul, mate. That's all it really is, right? Until the market tells me we're no longer in a big bull market, like that's the thing I should be listening to, right? Like the market is the thing that I should be listening to, not my thoughts or opinions or anything like that. It's like as soon as they, and what I taught here the last couple of days, especially of what to look for, they tell me that's coming. Like your account explaining the market properly. Most would think the top is in or a lot of fear, etc. But see, Abdul, mate, what you just said there is like your account expanding the property, like market properly. Most would think the top is in, and a lot of fear, etc. Abdul, mate, but you see the differences between me and most people. Most people saying the top's in, and they're having just a big guess that the top is going to be in, right? Well, what am I doing? I'm going based off what the market is actually telling me. Does that make sense? I'm going based off the trend's still up. We're going sideways here. There's nothing showing me there's a breakdown yet. So I'm going with what the market is actually telling me, not coming up with an idea or opinion. And so that's the only thing. That's the differences, right? And the same with the stock market and the S&P and so on and so forth, right? So that's the only differences. Well, that's the big differences for me and most people out there. Most people would think, there's the word think, and then they go down this path of seeing tops in. But if I'm going down the path of what I've just taught you there, what's the trend? 1, what's the moving average doing? 2, and 3, what sort of phase are we in? Are we in an energy using phase? Are we in a clear energy building phase? If we're in a strong trending environment, we have a strong moving average coming up. And if we are in that strong trending environment and we're clearly just in a sideways phase, then most of the time that is now getting ready for at least another leg to the upside. That's all. And then within that creates a good opportunity. The gold breakout is crazy looking at this chart. Do you think NVIDIA is a risky trap investment? It's a toss a coin with NVIDIA. NVIDIA. Toss a coin. But it's still very strong on the upside. We're definitely going through a bit of a correction phase here, but yeah. So with gold and silver for 2026, so we buy them all, hold or sell? I don't know. If you're looking at an investment, that's a completely different approach. If you trade in the market, you're looking for a good trade for a couple of months. Now we're talking about like another different approach. So depending, if you're a long-term buy and hold, well, then you need to have an approach and a system to utilize that, right? Trading and investing is not, if you buy it long-term for the next 1-2 years, that's completely different to me saying, oh, there could be a nice move here for a couple of months. That's a trading setup, trading the market. Get in, hold it for a few weeks, few months, get out, right? Long-term investing is buying and holding for many, many years. So you're saying 2026 is going to be a bull market for gold and silver. Cool. Did I say that? I don't know. That's a big guess right now for me. And if I'm a betting man, yes, we may have more upside in gold, but we're getting towards the end of this very big bull market in gold. So we may have another 10 or 20%. But where gold is right now, we're getting very close towards the end of this very big bull market before we start to see this is the bull market here. So even if we have another move to the upside, this is very, very, very close towards the end before we go through another really big correction here. Another one of these ones, right? Look at this here. This one from there to there, that was a 20-30% drop here. So even if we do have more move to the upside here this year, like that, that'll be the end before we see a really big correction out of it. So we're getting towards the last maybe 10-20% of the move before the overall big bull market is gone. And then we're going to spend at least 1 year having a real big pullback. That's what I'm saying. Okay, makes sense. Yeah, I understand correctly. I'm always curious about how people like us can be alongside banks, etc., because they can't move with the whole market. You don't need to. You know what I mean, Abdul? You don't need to, man. It's not like the banks know something secret. Like the banks use the same information we're using right now. You don't need to know, right, Abdul? Like you've been watching my session now for a while, even today. If you just All you need is a high probability trading pattern that's going to make you a good profit most of the time. And then trade that. That's all it really is. You don't need like, oh, I need to know what the banks are doing and so on and so forth. Like banks lose money as well too some months. You know that. If you actually look at their trading floor, they still have probably 20, 30% of the months throughout the year losing months. They actually lose money some months. So they don't always make money every single day, every single month. Repetition on school, yes. Yep. Have you need buying any physical to be safe? Oh, to be safe? Huh. Be safe from what? Be safe from what? Let me hold the physical, and then the whole world goes belly up. Then you've got a piece of gold. Okay. Well, I need to go buy something. Okay. Well, I've got to go sell this to get some dollars so I can buy something. and then you trade it back for dollars again. It's like recession, maybe. Oh. Nah. As long as you can trade, if you can trade the markets well, guys, if you can trade the markets well, who cares about a recession? Who cares about a crash? Big bear market crash for 1 year, cool. L-shaped trading pattern. Darren, how much would you suggest, John, you need in a trading account to begin with John? How much would you suggest you need in a trading account to begin with John? To begin with me? Or to begin just in general? What I want you to be thinking about as well, it's not the amount of money in your account that matters. That's not the thing that's going to make you money. And just because you have a very large trading account doesn't mean you're going to make money. That's the big problem with prop firms these days. Prop firms, what? You get like $100,000 trading account and you blow it up. The number one thing for you, Darren, is not the amount of money in your trading account. You need to know what an actual good quality setup is in the first place. That's likely to make you a profit. That's where you start, right? Most people are like, how much money do I need in a trading account to make money? I'm like, okay, here's $100,000. Now go trade it and make some money. Do you know what to look for? Do you know the really good high quality setups that's going to likely to make you a profit? Well, no, not really, but I've got money here, so I can go make money. I'm like, okay, and then you lose it all. So your first port of call as a newbie is if you can, Darren, watch this session back. I promise you. Just watch this session back. I'll give you a really high quality trading pattern to look for. But then guess what? Then it's the shiny object where you're not going to focus on what I teach you today. You're going to see it like, oh, that's a nice trading pattern. Like, oh, yeah, I can see that. And then, woof, you're off to Elliott waves and stochastics, MACDs, RSIs, candlestick reversal thingy, double tops, heads and shoulders. And then down the path you go. So that'll be the hardest thing for you, right? So it's not the amount of money you have in an account, because you can have a small trading account, but if you really know what to look for in a high quality setup, it's going to make you a profit most of the time. Call it 80% of the time or whatever. then even with a small account, you can grow that into a much larger account. Most people say, oh, prop firm, $100,000 trading account. And then they end up getting their trading account and then they blow it up. Why? Because they still don't even know how to trade. That's like me giving you the keys to Ferrari and you don't even know how to drive a car. It's like, here's the car. It's gonna go real fast. It's gonna go real fast. Oh my goodness, such a beautiful, fast car. And you crash it and you die. That's where learning, you need to know what to look for. That's going to make you the money. And then we can start to go from there. And this is where like a lot of traders spend so much time passing these evaluations account. You don't need a valuation account. Uh, 10, 20K, I'm thinking. Too little might be eaten up with fees. Well, all I say is this, Darren, is that if you are trading the markets right now and you have no idea what even a trading pattern you look for, if you're trading the markets, that is, if you don't even know exactly what the type of trading pattern you'll look for that's likely to make you a profit, then you shouldn't be trading at all. No trading for you until you get that. I don't care if that takes you 3 months to figure out. Go and buy courses, invest in some coaching or whatever. I can't offer you mine because mine's closed right now. But that's your first if you enter the market right now and you have no plan of attack, you just want to, oh, well, I think this is going to go up when you buy this. Let me test this out. Let me try this. That sort of mentality, you're never going to make it. But if you spend a bit of time, which is always hard, next 3 to 6 months, developing some sort of plan that you are going to have confidence within that trading plan, meaning what's the trading pattern you look for? That's all it simply means. What is the trading setup on the chart that you're looking for? And the unfortunate thing is most traders don't even have that, because most traders are not trading based off a plan. They're trading based off the Fed's going to cut rates, so to the moon. Again, what I teach and the reason why I'm successful now I'm saying successful now because I wasn't for a long time. And the reason why my coaching program is one of the most successful coaching programs out there is because I teach something that we can rely on for the rest of our lives. And yes, I do have losses, right? I'm still going to take my losses. I'm still going to have my losses in there. But if I can have something that's most of the time going to make me a profit, then rinse, recycle, repeat again and again and again. Bull market, bear market, crashes, whatever, right? And once I have that, and that's the reason why my coaching program is one of the most successful coaching programs out there, is because I teach people things that's going to work for the rest of their lives, because it's what markets do. Hey, John. Peter Burns, is there such a thing as resting phase, but resting phase for a big move lower? Yes, there is. Yes, there is. And the differences is, Peter, good question, mate. The differences is this. I utilize the moving average here, right? I utilize the moving average. Say, for example, I'm looking at, and this is the weekly chart right now, okay? Really good question. If the moving average, as you can see here with gold, right? I'm utilizing gold weekly chart here. As you can see, every single one of these energy building phases when the market did start to break out into a bull market, when it did nothing for 3 years, bull market here. Okay, cool. We're in a bull market now. And then we go through these energy building phases here. These are 3 months. This one here was about 4 months and so on and so forth, okay? But notice, Peter, one thing. Notice how the moving average kept going up, right? It didn't flatten out. That's showing you that there's a lot of momentum behind this trend still. So when you start to see that, no, there's no probability of it going down. Now, I learned this actually a long time ago by utilizing this here. If I go back to IWM here and I go back to the past, notice here. Notice how we did get what? Notice how we did get the sideways energy building phase, but notice how the moving average started flattening out. This was a long time going sideways, and then it flattened out after a very big move up for a few years, and then it went sideways, but then it went two sideways and the moving average started flattening out. If that's the case, then there could be one, a false breakout coming, and two, there could be some sort of reversal coming in the markets. So yes, you are right. There could be there. And that's why I'm always watching what the moving average is doing, because if the moving average is still trending in that direction, like gold and a lot of the stock market right now, it shows you there's a lot of momentum still in that bull market. But if we have a big bull market like we saw here with Russell, but then the moving average starts to flatten out, it's showing you the momentum of that phase now. This big bull market here is slowing down. And that's when we could potentially start to see the drop in the market. So good question, man. Good question. And that's why I'm so big on having a strong moving average within the energy building phase. If we have a strong bull market or strong bear market, and we get an energy building phase and the strong moving average, there's a high probability of us seeing at least another move on the downside. And that's why we look at the Russell now. The Russell is still strong trending to the upside here. Russell, this is the S&P here, and so on and so forth. So I'm really, really, really big on the moving average, because as you can see here, if you look at this chart, look at this here. Move it up, 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 up. Look at this here. As soon as the moving average flattened out, that was the end of the bull market here. Look at this here. Up, 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 up. Look at this right there. That's when it flattened out there. Now, this is a weekly chart here, right? So when we started to flatten out right there, and let me zoom right in here. Look at this here. So it's when this 24 moving average on my weekly chart gives me an overall, what's the overall picture? Is this just a bit of a short-term correction for a few months before we continue in the trend? Or is this long-term trend now slowing down? And the big thing that I'm always looking for is obviously breaking of lows. So we're no longer making higher lows anymore. And then the second thing is does the moving average start to flatten out? And as you can see, it started flattening out back here. So that gave you the sign that, okay, we could be getting ready for, that. And that's where right now, if I'm speaking right now, we're not getting that right now. We could be, but right now we're not. I wonder what did the rates do today? Nothing. TLT, TMF down again today. Yeah, the moving average. Yeah, Peter, mate. The moving average really gives me a guidance on. I use it as a momentum indicator. And if we've been very strong to the upside for a couple of years or even for 12 months, but then it starts to flatten out, it's showing me the momentum in that bull market is slowing down. And that's when you start to get those. But if we don't get the slowing down period, then it's just probably going to push back to the upside, just like gold did the entire time. Good question, man. Good question. And again, I really started to understand that back when, especially what I was showing you with the Russell and the IWM, because I traded the breakout. I traded this breakout here, back here when I started the breakout up here. And I didn't know why it didn't have a really big move, because I come off the back of this massive sideways phase. I'm like, here we go, big move up, and it failed. And it made me dig deep to think, why did that fail? What was on the chart that I could have seen? Yeah. No, you can't have a 24-day moving average on a weekly chart. That doesn't make sense. If there's a 24 moving average on the weekly chart, therefore it's a 24 weekly moving average. The 24 is on the weekly chart, so therefore it's a 24 week moving average. Forget the day weekly. If it's on the weekly chart, put a 24 on the weekly chart. Yeah. And the two moving averages I like to use myself, and I'll just show you here. I'm going to bring it back to my trading view here. Averages that I like to use myself. 24 on weekly and 52 on the daily. Oh man, this could be set up for a really big move out of the stock market here. If this starts to recoup here, guys, this is the 4-hour chart here. Look at this here. Higher high, pullback, higher high, pullback. If that starts, if we get something like that, guys, anyone calling a top is going to they're gonna say, what a shit start to the year. I've lost so much money. And then we start this, and then this here. Because all this energy that's been building up here all this time, what we talk about here, is going to start to be released. So we're not there yet, but that's the one thing I'm watching for. Oh, very nice. Very, very nice. Oh, there's some really big moves coming, guys. Some really good setups going to come. Man, there's some nice setups here. Wow. Like individual stocks in the individual markets, there's some really, really big moves that are coming soon. Let's go to here. That should be bullish for the markets. Yeah. Mm, 30. Ooh, look at that. Can you see anything with Bitcoin yet? What do you mean? What do I see? Bitcoin itself. Okay, so looking at Bitcoin right now, I would say there's probably one more move on the downside coming. And then it may start a reversal from there. So here, that's that low level down there somewhere. So there, and then even possibly up through there somewhere. So if we do start to break below, say 86, I would say, then we're probably going to go for another move on the downside. And then we're probably likely to pick back up again. So we're probably going to get something like this here, as you can see. So you can see here, we come down through here. We have a pullback. We have one flush down, and then it might reverse. Come down, little pullback, get a flush down, and then it might reverse from there. So the trigger point for that there would be to start to see the leg coming down would be through here. So if we start to get, just looking at the small, so we start to get a break below around the 84,000 level after holding, if it does hold here and break down to 84, then that should trigger that 84 level roughly, 84, 85, somewhere in there. So another 15% drop in the markets there. Yeah, but then we may get a bounce. But the interesting thing is that with the bounce though, what I'm seeing with crypto market is it's actually doing something now that is possibly looking weak for that. So we may be startering. There's a word for you. Startering. We may be startering so this is the 52 here. Oh, sorry, the 24. So the 24 is coming down there like that. So what may end up happening is we come down to here. We bounce back up. We come back up here. And then it starts to roll over again. So things are not looking too bullish here. So yeah, so if it did actually drop down here now, come down to here, it's probably not going to be a big drop, but it'll probably come down to 70. Yeah, that's 75 level, like you're saying. That this whole area through here, and then it may even flush down through here because there's the low through there. So it's probably going to flush down past that low, probably even get to the 70,000 level. And then it may bounce up through there, getting people thinking it's in. Moving average comes down through to here, and then it has another big move on the downside. Just give me a sec, guys. So that's probably what's going to happen with Bitcoin. Let's go. Ethereum. How cool is that? Copper, how's copper looking? Basically all-time new highs. Oh, look at Congo. This is actually a trade that. Oh, thank you, Peter. Appreciate that, mate. This is actually a trade. This breakout here, from there to there, it was actually a trade that one of my 1%. Owen, mate, if you're watching right now, or if you're watching the replay, I'm calling you out, mate. Yeah. And the reason why it was a trade is because, as you can see, we had a very strong low, high low, and we had the moving average coming up through there, as you can see. And then what did we get? We got up, and then we got side. See how it went sideways through there? Like that. So that told me that once we break out through here, then we're likely to see a move to the upside. And within that, there was a high probability of trading pattern. And that was the weekly chart there. Then utilizing the daily charts as soon as that was the weekly setup there, the L-shaped trading pattern. And as soon as we get the breakout, it's given us a high probability of starting the next move. And then we had a nice move up from there. Beautiful, beautiful, beautiful move up from there. High probability. And I'm very, very proud of him because he's the one that, identified it, took it, had a really nice trade from there. Uranium. Wow. XRP is up 7%. Here we go. It's got to finally be adopted by the banks. That's still going. Look at that. This is what I took this trade here last week or last year. Remember I said before, L-shaped trading pattern. Strong moving average coming up. Market goes up. Has a bit of volatility going sideways. When you get that, there's a high probability of seeing another move to the upside. Up, sideways, away we go. XRP. XRP is a piece of poo. There's so many years that thing's been. It's been finally adopted by the big banks. It's going to go to the moon, and then it goes to zero. Google, so different phases, right? Google was in, as you can see, an energy building phase or nothing going on. Energy using phase. Now we're probably starting a next energy building phase. Meta. Oh man. Meta's still struggling. Barber's definitely one that I'm really watching for. I think Barber's got some good legs in it, actually. Why? Because it's making higher lows. The moving average is trending up, and we've gone through a bit of a pullback. Not an L-shaped trading pattern, but it's definitely gone through a pullback. eBay, Amazon. Oh, Davey got hit hard today. Microsoft. Oh, man. Actually, Peter, mate. See, here's another good example of what I was talking about here with the moving average. So you see this point through here. Look at this here. You see how with Microsoft it actually was going up through here. When the moving average is trending up and we get the sideways, that typically has another move to the upside. But if it goes up and then it goes sideways, but the moving average flattens out, that was the point where see how it dropped through there. So the moving average was telling you that we never know if it is going to drop. We never know how big though. But yeah, the moving average was telling you that there. Just another example. Actually, two examples here. Look at this here. Up, 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 flatten out. Up, 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 flatten out. Every time we had that, started the downtrend from there. And that started the downtrend from there. Or at least what we call these correction phases. So it is the flattening out. Yes, think about this from a momentum point of view, right? So Peter, let's do this here, right? So the moving average to me is like a momentum indicator in the markets. And if the moving average has been doing this here for 1, 2, 3 months, it's been doing like that there for 3 months, right? It's been going up. But then suddenly, that to me is now strong momentum on the upside, because I use the moving average like a momentum indicator. There's the momentum in these markets here. But then suddenly what happens is the market will go through here, and then it'll start to do this here. So this here is now starting to call slowing down. The momentum is now start to flatten out. So this here is strong. And this here is now starting to call slow. It's actually you can see it from a momentum perspective. Is that if you had like a car here, right, and the car was going along a freeway, and it's going and going and going and going and going and going and going on the freeway, eventually it's going to slow down because it needs to stop, and it needs to, maybe park a little bit and go for another another refuel in there. So then when the moving average, it goes from strong momentum, strong, but then it starts to flatten out. This is now showing you that this momentum in the back here, which was strong, is now actually slowing down. But when we don't get the slowing down and we do continue to get the move to the upside, as you can see all through here, anytime we had a drop, but the moving average was trending up, most of the time we have another move to the upside, and so on and so forth. So I use it for like a momentum indicator in the market. And that's where when we do get the L-shaped trading pattern up and sideways with a strong moving average like that, you typically do get another leg to the upside of that there. That's a different thing, Peter. That's a different thing. So what I'm talking about here is what's happening with the momentum, okay, of the markets there. What you're talking about is, and you are right, what you're saying there, that's now called the market's gone too far. It's done too much, what's called exactly what you said. It's done too much price. So now these are different things, right? So one is telling you that we've done too much price, we've gone too far away. We're probably going to go through one of these energy building phases. So that's what that is. That's just telling you about that. But when we start to go through the energy building phase, what ends up happening with the moving average? The moving average will tell you, is this energy building phase like here, where we spent a couple of months going sideways and the moving average coming up? If so, we're getting ready for a move to the upside. But if we go through an energy building phase like this here, but the moving average flattens out, now it tells you that this overall trend is actually slowing down. So that's what that is. So one is about the momentum of the big bull trend slowing down because it's a weekly chart. So the overall trend slowing down. And then when the technique is when the market gets too far away, the reason why that's powerful, Peter, is because a lot of traders will wait for the market to go up for a couple of months. It gets too far away, then they start to get excited about it, and then the market pulls back against them, and they don't know why, and it's because of that. I told you silver will go to 100. The silver go to 100, did it? Well, I didn't say that. Did that happen today? Man, I missed that. Did silver go to 100 today, did it? Man, I didn't see that. But just remember too, Peter, right? It's like everything is probability, right? So it just helps us understand what's going on. But nothing works 100% of the time. But it just gives us a bit of guidance. The main thing for me, Peter, is, as I said before, like these other things, these trading techniques are awesome. But the thing for me is what I'm looking for in a high quality setup is very simple. I'm looking for the moving average trending up, and then I'm looking for the market to go up through here, and then I'm looking for a sideways period. If I can get this set up here like this, and then we start to break out like that through there, breaking above that level through there, that tells me there's a massive probability we're going to see another leg to the upside like that through there. And within that comes a good high quality trading setup. Does it last, if it's a daily chart, does it last a couple of weeks? Does it last a couple of months? And then rinse, recycle, repeat. So once again, once we get something like that, that's my alert to say, there could be another leg to the upside soon. That could be a good trading opportunity. And that's all I do. That's the bottom line. And then that's how I do really well as a trader. I don't have to make something up. I know it works most of the time. I have my losses as well. Rinse, recycle, repeat. This is how, for me, this is another reason why like I do these live streams here for a couple of hours, but my trading only takes about half an hour per day because I'm getting into trades. And then I'm checking the trades, I'm monitoring it, and then seeing what's happening with those trades. Because I'm not getting in and getting out the same day. I'm getting in and holding for a couple of weeks, for a couple of months. So I make good money from trading, and I only trade because I trade this on the daily charts. Meaning I'll get in and hold it for a couple of weeks, and then every day I'll come back to see new opportunities / monitor and manage the trades I'm already in. And then I do this. And it takes me half an hour, maybe an hour per day. But these couple of hour sessions here that I'm doing, this is just for the live stream and stuff like that. But then I also do enjoy manually going through the markets myself and getting good at it. So, and this is where, because I know, and the reason why, because I don't spend a lot of time having a guess and trying to come up with a story. I know exactly what I'm looking for, and we can go from there. Check China. Check XRP. It's about to break. XRP is about to break, is it? Damn. How do you know that? I got a call from the president. He told me it's coming. XRP is a piece of poo. I wonder how the Aussie market's going. What's happened with the Aussie market lately? Let's go have a look at some of the indexes here. I take your class. Wow, look at Rio Tinto. Rio Tinto is one of the biggest stocks in Australia. Rio Tinto and BHP is one of the biggest mining stocks in Australia. Oh no, I'm pretty sure they are the biggest mining companies in Australia. I as well too. But man, look at that thing move, eh? Hey Peter, I'm not sure if you're still around, but check out this. Do you see Peter? And with the moving average, there's the pattern, there's the moving average, and what happened? Had to move off it. This here is called a high quality, high powerful trading pattern. Now, again, we never know how long it's going to last, how far it's going to last, but just works, man. Just works. There it is there. The L-shaped trading pattern with the strong moving average. Works on every market. Every market. Even happened with Ethereum last year. I had a beautiful trade with it on Ethereum last year. I'll show you the Ethereum trade. So same setup, L-shaped trading pattern, strong moving average. Aha. Look at Ethereum. Ethereum went up, then it went sideways. The moving average was coming up through here. When it broke through here, there's the L shape, and I had a really nice trading. This one here I made a lot of money on this trade here. So this was the trading setup here. Same with Ethereum. It's all the same thing. That's where I don't make anything up. Let's go to BHP. Again, this is another large mining company within Australia. The good old Aussie folks, eh? Down under folks. I think Qantas. Oh, look at that. Okay, cool. Oh man. Bitcoin went up 1%, and I got it right. Market did not melt up. You know what a melt up is, right? A melt up takes months. That's what a very big melt up is. It went up 1%. I got it right. Good job, man. Oh, yeah, good job. Well, I know you don't. Well, I have never met anyone that makes really good money in the markets by having a guess. Well, anyway. Da-da-da. 13 calls, eh? Oh. Okay, righto. It was a prepaid plan with the bankers. Righto. What a lot of bullshit that is. I planned it with the bankers and it went up 1% and I got it right. It's like, righto. Oh my goodness. Oh, thank you for the laugh. I appreciate it. Oh. Anyway, guys, that's it for me today. I'm done and dusted. I'm going to go enjoy my life. If you do call, you made them. Anyway, guys, I'm done for the day. Have a great day, everybody. I'm out.